the three of you are representing three very different ownership structures. Steve, your ownership structure is one of a family focused on various goals and objectives. David, you and Cyril have somewhat similar ownership structures, but a different personality, I would think, of ownership structures perhaps. And I would love to hear from each of you how your shareholders look at the ROI and the spend and how you have to justify that to your shareholders, and how you determine the ROI of how, what you spend, or if you really can. I know you have to estimate it, and how your shareholders react to that.
The issue of, and this is something that comes up, I live in the private capital world, so I deal generally with financial types as far as who's on our boards. And the question that you just posed is the question that many of them love to ask. They say, what's the ROI on this advertising campaign, or what's the ROI on this sampling campaign? Measuring return on investment for a marketing investment is an art form which is practiced slightly differently by different people, but I'd say it's inexact even when it's practiced by the very best in the business. And I think the ultimate measure is the historic fact that advertising has been a very efficient and productive way to build a brand, and then by the specific result, is the business doing well? Are your sales growing? Is your point of sale velocity in major retailers growing? And that's ultimately how you wind up measuring.
So our company is majority owned by Cerberus, who, as Banks mentioned, is very, very good at complex carve-outs, distress situations, all those things. It's exactly what we were when we started. Although, again, we had this billion-dollar digital asset, and we had this rapidly declining print asset. We put them together, we got through all that, and we got way ahead of the plan. And so now everyone's asking the question, well, how do we capture significant value? And that's going to come from brand. Back to Yelp, look at the Yelp valuation. So the conversations we have is, well, are we going to be valued on multiples of EBITDA? And so if you're at 8 times EBITDA, so every dollar you spend is 8x of value that you've given away, right? So back to proving the value. Or there's companies like WhatsApp or Yelp that are infinite multiples of EBITDA and are tens of multiples of revenue. So so should we put a lot of money into driving usage, consumer usage and brand, and then boy, we could go public off of that? And then how much, and what do you put it in? And so that conversation has really shifted from where we started to where we are now. And as I think about it, back to how to use that money effectively, I mean, even if I took $100 million and threw it at, I'm not sure it would get us to where we wanted to go. So I think you go back to I always think about it as trying to find a balance. And the other thing I think you run a risk into when you're dealing with financial types or people having the marketing is you want to be very metrics driven. I want to see it on a graph. Okay, so we're going to move brand awareness, right? Right. How did it move last week? Well, it's not going to move in a week. Okay, and you're going to run flights, and you're not going to be able to be sustained. So are you willing to bet on this for multiple months, multiple quarters, multiple years? And there are metrics, though, that I can move daily, and I can move. So you could easily skew towards, well, I'll just take all my money and I'll throw it into search engine marketing, because I know exactly how many clicks I'm getting and what the cost per click is, and I can make a really nice chart, and I can show that to my investor, and they go, that's great, the chart's going. But I know that's an ephemeral use of the money because I've got to click to a site, but I didn't create a loyal user. And so it's a much more sophisticated conversation. Like you were saying, you have to have a belief in what you're doing over a sustained period of time, that because you create brand, you're going to create more loyal customers, going to create a better business that's going to be sustainable, and ultimately it's going to create value. But it's a different kind of conversation, and I think it's going to be an ongoing one for us as we go forward.
Yeah, I think from a privately held perspective, it's a constant point of discussion. How much should you invest behind your brand? But really, it's kind of simple at the end of the day, especially in the OTC realm. You have your drug on the shelf with your brand, and CVS has their private label product right next to yours, maybe at a 20, 30%, maybe even 40% price discount. Why is that consumer going to buy your brand? They're going to buy it because you've invested years of marketing money to create that emotional connection with the consumer. And the balance is always tough, and really at the end of the day, marketing it's an art more than it is a science. But that's why I like to frame it with the family. The brand makes all the difference, and that's really where all the value is at the end of the day.